How the M&A process works. Many company sellers ask me what to expect from the M&A process. I tend to say that every process is somewhat different, short or long, easy or difficult, predictable and unpredictable. Yet there are a couple of typical milestones that can be defined. I have split it this time into 7 stages, but others have done anything between 3 and 10. Send me an email if you have any questions. Step number 1. Strategy, target identification. Every successful deal begins with a clear strategy. This first phase involves defining objectives, what type of business should be acquired or sold, what industries, regions, or capabilities are being targeted. Once the strategy is set, the process of identifying potential targets or potential buyers begins. This includes market research, competitive analysis, and alignment with long-term goals. I have done another 8-minute video on this topic alone. The link is below. We at FaMAS focus our work on this stage 1 as our unique service. We're believed to be better than anyone else. Given our 30 years of experience, we can help here in days where others need years. Initial contact and NDA. Once a potential counterpart has been identified, the next step is to initiate contact, often discreetly and through an intermediary. If interest is mutual, both sides sign a non-disclosure agreement or NDA to protect sensitive information during the discussions that follow. This builds the trust necessary to begin open dialogue and exploration. Again, we do this a lot, a few hundred times each year. Ask me for free advice if you have a question. Preliminary valuation, letter of intent, LOI. At this stage, the buyer performs an initial valuation of the business based on high-level financials, market data, and strategic fit. If both sides align on value and intent, a letter of intent, or LOI, is issued outlining the proposed terms and providing a framework for the next steps. The LOI is typically non-binding, but sets expectations around price, structure, and exclusivity. This is the first really tricky part, where most of the projects get stuck. Unrealistic expectations on either side, buyer or seller. We help here to overcome those expectation gaps. Due diligence. Due diligence is a deep dive investigation into the business being acquired. Legal, financial, operational, tax, HR, and IT elements are reviewed in detail. The objective is to confirm assumptions, identify risks, and uncover any issues that could impact valuation or deal terms. This is one of the most critical phases of the M&A process. While we support this stage at FaMAS, we are typically not the key forensic analysis. Typically, specialized audit firms do the work here. We have worked with many of them. Not all are doing an equally good job. Again, I am happy to help if you have a question. Final deal structuring, contract negotiation. Based on the findings from due diligence, the final deal terms are negotiated. This includes purchase price adjustments, indemnities, warranties, earnouts, and other legal provisions. The definitive agreement is drafted and reviewed by legal counsel on both sides. Prioritization in structuring this stage is key to avoiding post-close disputes. There are hundreds of little things that can halt the process. Lawyers hired to negotiate the best deal possible, unfortunately, often take this too seriously. Well, I guess they are paid to do that. Happy to help here, even though we do not provide legal services. Financing, deal closing. If external capital is required, financing is arranged through debt, equity, or a combination of both. Once all terms are agreed upon, documents are signed, funds are transferred, and the deal is officially closed. This is the legal and financial end of the transaction, but it's not the end of the process. We help on securing and structuring financing for deals. It is a side business for us, which we do with a number of partners who provide up to 150 million euro per deal and transaction. Happy to help here if you need advice. Post-merger integration, PMI. After closing, attention shifts to post-merger integration, or PMI. This phase often determines whether the deal actually delivers value. It includes combining systems, teams, processes, and cultures. Often, individual ego of key people can be in the way. Watch out for personal chemistry. PMI must be planned early and executed with discipline. especially in challenging or distressed situations. It is good to have detailed 100-day plan post-merger before you complete the transaction. Watch out for holidays of key people. If they are not around to help implement, you can bin your plan immediately. Strategic perspective, the role of FaMAS. At FaMAS, we focus on searching and finding good deals which will smoothly go through all the stages, including PMI. Most of what we do is initiated with the research, but clients have also hired us on individual elements of the process. I often say buying companies is easier than you think. You simply need to pay more than anyone else. You do not need us for that. Making it worthwhile is a totally different story. You need many people for that. Not even Elon Musk can do it alone. Final takeaway, the M&A process is complex, but when managed properly, it creates real, lasting value. Whether buying or selling, understanding each phase helps avoid surprises and improves decision-making at every step. When the process is aligned with strategy and executed with precision, M&A becomes a powerful engine for growth, value, and wealth creation. If you'd like to get in touch, this is our contact information. Thanks for watching. If you enjoyed the video, leave a like and make sure to follow so you don't miss any future content. And be sure to check out my other videos too.